Trading wisdom. No one trade should make you or break you. Welcome to this essential guide for trading beginners. If you're stepping into the world of trading, you're likely driven by the promise of financial growth, independence, or maybe the thrill of the market. But before you dive in, let me share a critical piece of wisdom that can shape your journey. No single trade should define your success or your failure. In this video, we'll unpack why this principle is vital for any trader, especially beginners. More importantly, we'll walk through strategies to help you avoid emotional pitfalls, build sustainable habits, and maintain a long-term perspective for trading success. Let's get started. Many beginner traders fall into a dangerous trap. They put all their hopes, and sometimes too much money, into one trade. While it's tempting to believe that one perfect trade could instantly change your life, this mindset is, at best, unrealistic and, at worst, financially destructive. Putting too much faith in one trade often leads to emotional decision-making. Think about it. When you're counting on one move to make you rich, every market fluctuation feels like a crisis. If the trade wins, you may feel invincible and make riskier moves in the future. If it loses, you may spiral into frustration, stress, or fear, making it even harder to recover. Take, for example, a beginner who invests their entire savings in a single stock they believe will skyrocket. If the trade turns against them, they don't just lose money, they lose confidence. This emotional swing often leads to rash decisions like doubling down on losses or giving up entirely. To succeed in trading, you need to understand that no single trade, however tempting, should dictate your long-term success. Now that we've outlined the problem, let's focus on building a foundation for smarter trading. The secret to trading success lies not in one-off wins or risky gambles, but in a mindset focused on consistency. Let's break this down into actionable steps you can adopt today. Trading isn't about chasing big wins. It's about making consistent, informed decisions that, over time, build meaningful gains. Imagine you're climbing a mountain. One massive leap might seem faster, but the risk of falling is much higher. On the other hand, small, steady steps get you to the top safely. That is the mindset you need to bring to trading. One way to mitigate risk is by spreading your investments across different trades or asset classes. This is called diversification. By not putting all your money into one trade, you reduce the chances of losing everything if one trade goes wrong. This approach helps protect your portfolio and keeps you in the game. A critical part of trading is learning how to manage risk effectively. Two essential tools beginners should use are position sizing and stop-loss orders. Position sizing. This refers to deciding how much capital to allocate to a single trade. A good rule of thumb is never to risk more than 1 to 2% of your total capital on any one trade. Stop-loss orders. This is a preset order to sell an asset once it reaches a certain price, helping to minimize potential losses. It's like a safety net that protects you from letting emotions keep you in a losing trade. It's easy to dream big in trading, but unrealistic expectations can lead to rushed decisions and unnecessary risks. Start by setting small, achievable goals, such as aiming for a specific percentage return over a month. Over time, these incremental wins will build into long-term success. A trade journal is a must for any serious trader. Use it to record every trade, including what you bought or sold, the reasons behind your decision, and the outcome. Over time, this practice will help you spot patterns in your trading behavior and highlight areas for improvement. Now that we've discussed the foundation of sustainable trading, let's dive deeper into some core concepts that can improve your decision-making skills. Every trade involves risk, but successful traders balance it with potential reward. The risk-reward ratio is a simple tool to evaluate whether a trade is worth pursuing. For instance, if you risk $100 to potentially gain $300, your risk-reward ratio is 1 to 3, meaning you stand to make 3 times the amount you're risking. Look for trades where the reward justifies the risk. One of the most underrated strengths in trading is the power of compounding. Small, consistent gains can grow exponentially over time. For example, if you make a 1% profit daily and reinvest it, that growth multiplies significantly over weeks, months, and years. This is why focusing on steady gains rather than dramatic wins is key. The fastest way to lose money as a beginner is to place trades without understanding what you're investing in. Spend time researching the asset, market conditions, and broader economic factors before making a move. Unlike guessing, educated decisions pay off consistently. One of the most valuable lessons in trading is learning to wait for the right opportunity. Markets are constantly moving, and not every moment is the right time to trade. As a beginner, remember this mantra: patience pays. Markets evolve, and so should your strategies. What works during a bull market might fail in a bear market. Continuous learning and adaptability are essential to staying ahead. Trading is not gambling. While both involve risk, traders make informed decisions based on data, analysis, and strategy. On the other hand, gamblers make bets based on chance. Always approach trading with a calculated mindset. Rather than viewing trades individually, think of your portfolio as a whole. Each trade is just one piece of your broader strategy. Diversify your investments, evaluate risks, and aim for balance within your portfolio rather than gambling everything on one high-risk trade. As a beginner, learning the right tools and techniques can give you an edge. Here are some practical steps to enhance your trading journey. There are many beginner-friendly analytical tools that can help you evaluate the potential of a trade. For instance, price charts, stock screeners, and news aggregators can provide insights about trends and opportunities. Start simple and gradually expand the tools you use as you grow more confident. You don't have to learn everything on your own. Use free or affordable educational resources, books, webinars, online courses, and YouTube videos tailored to beginner traders. The more you educate yourself, the better equipped you'll be to make informed decisions. Before jumping into live trading, consider practicing in a virtual trading environment or using demo accounts. These platforms allow you to experiment with strategies and learn from mistakes without risking real money. It's a low-pressure way to build experience. Learning from experienced traders can save you from making common mistakes. Follow credible trading mentors, join trading communities, and don't hesitate to ask for guidance. Networking with other traders is an excellent way to exchange ideas and grow your understanding of the market. As you start building smarter habits and practicing good strategies, confidence will naturally follow. Here are 3 key points to keep in mind as you grow. In trading, experience is one of your greatest teachers. Every trade, whether it's a win or a loss, is an opportunity to learn. Reflect on what went right or wrong and use those insights to improve your future decisions. Trading is a journey, not a sprint. Remember to celebrate small successes along the way, whether it's achieving your first profitable trade or sticking to your risk management plan. These milestones remind you of your progress and keep you motivated. Confidence comes from knowing what you're doing. The more time you invest in understanding trading principles, tools, and market behaviors, the more prepared you'll feel to make decisions without second-guessing yourself. Let's wrap things up. Trading is not about finding that one lucky break or a so-called golden opportunity. It's about building a mindset of consistency, patience, and discipline. No single trade should have the power to make you or break you. If you remember one thing from this video, let it be this: success in trading is a marathon, not a sprint. Focus on creating a balanced portfolio, managing risk carefully, learning from experience, and celebrating steady progress. If you found this content valuable, don't forget to like, share, and subscribe for more beginner-friendly trading tips. Let's embark on this journey together and build the skills you need for a sustainable trading career. Thank you for watching, and trade smart.